These are 8 top big cap stocks with large percentage gains today. Our review on HUMA. Humacyte Incorporated is a biotech company developing off-the-shelf, bioengineered human tissues, focused on human acellular vessels, HAVs, for uses like vascular trauma repair, dialysis access, peripheral artery disease, and coronary bypass grafting. They're also exploring applications in pediatric heart surgery and type 1 diabetes cell therapies. It's an ambitious play in regenerative medicine that's now gaining traction. HUMA stock surged over 30% in one day, following insider buying from director Kathleen Sebelius, who purchased 50,000 shares, and Michael Constantino, who bought 16,000. Insiders typically don't invest unless they see something promising, and with the recent FDA approval and launch of Symvess, Humacyte is clearly building momentum. The financials aren't perfect yet. No revenue in 2024 and a $148 million net loss due to non-cash adjustments. But the company raised $46.6 million recently, which should give them the resources to push forward. Symvess is already in hospitals, with value analysis committees reviewing it, and some centers have approved it. If they can get widespread adoption in Level 1 trauma centers by the end of 2025, it could drive revenue growth. Analysts are optimistic. TD Cowen maintained a buy rating with a $5 target, citing long-term growth potential, and Benchmark is even more bullish with a $17 target. Despite the stock's dip from dilution, it's being seen by some as a buying opportunity. With insider confidence, positive analyst coverage, new funding, and a product gaining traction, Humacyte's breakout might be just the start of something significant for long-term investors. Our review on BALY. Bally's Corporation is a big name in the global casino and entertainment scene, owning 19 casinos across the US and a presence in the UK. They're not just about brick and mortar, though. Bally's has made strong strides in the digital world with platforms like BallyBet, an iCasino platform, and their growing interactive gaming business. They're also looking to develop the old Tropicana property in Las Vegas, so they've got a diverse portfolio. Today, Bally's stock soared by 32%, and it's all thanks to a big funding deal with Star Group. The deal gives Bally's a solid financial boost, making it easier for them to expand both their physical casinos and their digital offerings. This is a big win for the company, signaling strong growth potential ahead. With their diverse gaming operations, thousands of slot machines, table games, and hotel rooms, plus the growing importance of sports betting and iGaming, Bally's is positioned for long-term success. Today's surge is a sign that they're getting the support they need to push even harder into these markets, and investors are definitely taking notice. Our review on SUP. Superior Industries International Incorporated designs and manufactures aluminum wheels, primarily for original equipment manufacturers, OEMs, in North America and Europe, as well as for the aftermarket in Europe. They're a big player in the global aluminum wheel market, supplying OEMs with wheels for factory-installed vehicles, and they also have a strong presence in the European aftermarket under brands like ATS, RL, Alutech, and ANZIO. Their North American manufacturing is based in Mexico, with products sold across the US, Canada, and Mexico. Today, Superior Industries stock jumped by 32%, and it's one of those moments where you really have to look at what's driving the action. While the specifics behind the surge aren't fully clear, it signals investor optimism around the company. This kind of movement suggests that something positive is happening, whether it's new contracts with OEMs, a big shift in the aftermarket space, or maybe even some improvement in the global supply chain challenges they've faced in the past. Given Superior's position in the global wheel market, with a focus on both OEM and aftermarket sales, any uptick in demand for vehicles or a shift in automotive production trends could be big for them. If they've locked in new partnerships or secured more orders, today's stock spike could be just the beginning. For investors, it's a good time to keep an eye on how this momentum plays out, especially if the company continues to build on this positive momentum moving forward. Our review on FWRD. Forward Air Corporation is a transportation services provider with an asset-light model, offering everything from less-than-truckload (LTL) and truckload services to intermodal drayage and freight brokerage across North America, Europe, and Asia. Their key segments include expedited freight, intermodal, and omni-logistics, making them a strong player in logistics and supply chain management. Today, Forward Air's stock shot up 31%, driven by strong preliminary first-quarter results. The company expects adjusted EBITDA to hit between $54 million and $59 million, and liquidity is up to $392 million, which is a $10 million improvement from the previous quarter. These positive numbers were enough to get investors excited, especially with the news that their exposure to tariffs was lower than expected. Only 10% to 15% of their 2024 revenue is at risk. The stock also saw a 30% breakout during regular trading hours, reflecting a strong market reaction. With these solid financials and a lower tariff impact, Forward Air looks well-positioned to continue gaining ground. Investors will be watching closely when the full results are released in May, but for now, it's clear this stock has some serious momentum. Our review on KRUS. Kura Sushi USA Incorporated is all about blending authentic Japanese cuisine with cutting-edge technology. With around 70 locations across 20 states and DC, they've become known for their revolving sushi bars and tech-savvy dining experience. Think fresh sushi, broths made in-house, and even robot servers and tablet ordering. But beyond the sushi, they're also focused on things like gyoza, tempura, and even cheesecake, all made without artificial sweeteners or preservatives. Today, Kura Sushi's stock shot up by 31%, which definitely turned some heads. Despite missing revenue targets and facing challenges like a drop in customer traffic and some pressure on profit margins, investors are clearly still excited about the company's long-term growth prospects. The stock's rise comes after a Q2 report where the company posted revenue of $64.9 million, a solid increase from last year but still a bit shy of analyst expectations. What really seems to have caught the market's attention, though, is Kura's ongoing efforts to expand and bring in more tech-driven solutions, like a new reservation system aimed at managing labor costs better. It's also worth noting that while the company's bottom line wasn't great, the focus is still on what Kura can do in the long run. They've got a strong cash position and are moving forward with plans to keep growing, which is probably why investors are looking past the short-term challenges and betting on the bigger picture. Even though analysts are holding off on a buy rating for now, the optimism around Kura's growth potential remains high, especially with the innovative edge they have in the restaurant world. The market clearly believes that this company's tech-driven approach might be the key to navigating some of the current pressures they face. Our review on CPRI. Capri Holdings Limited is a global player in the luxury fashion world, owning high-end brands like Versace, Jimmy Choo, and Michael Kors. With a presence across accessories, footwear, and ready-to-wear, Capri operates in multiple segments, offering everything from Versace's luxury couture to Michael Kors' more accessible, stylish collections. Today, Capri Holdings saw a 31% jump in its stock, and the reason behind this spike is linked to a major shift involving one of its key assets. Prada is reportedly closing in on buying Versace from Capri for $1.38 billion, which is significantly lower than the initially expected price of $1.6 billion. This price cut comes after recent negotiations were influenced by the ongoing effects of trade tensions, particularly from the trade war under the Trump administration, which has put pressure on luxury goods businesses like Versace. While the deal's timing could slip a bit and there could be some further small adjustments, this sale still represents a big change for Capri. This move has some mixed implications for Capri's future. On the one hand, a sale could free up capital and simplify its brand portfolio, but on the other, it's a significant shift in the company's luxury focus. For investors, the 31% boost suggests that the market is viewing this as a positive strategic step, potentially giving Capri more room to grow its remaining brands, particularly Michael Kors and Jimmy Choo. It's all about how Capri reinvests in those brands going forward, but for now, the market is clearly excited about what's to come. Our review on LXEO. Lexeo Therapeutics Incorporated is a clinical stage company focused on genetic medicine, particularly targeting cardiovascular diseases and Alzheimer's associated with the APOE4 gene. The company's pipeline is all about precision, using early-stage data to develop treatments for specific, genetically defined conditions. Right now, its most advanced therapies are aimed at Friedreich's ataxia and arrhythmogenic cardiomyopathy, both of which have shown some early promise in clinical trials. Today, Lexeo's stock shot up 29%, and there's a pretty good reason for that. The company has been making some exciting progress in its phase 1 of 2 trials for LX2006, its gene therapy targeting Friedreich's ataxia cardiomyopathy. The latest data showed that a significant portion of patients had positive outcomes, including a reduction in left ventricular mass index, LVMI, which is a key marker of disease progression. This result aligns well with the FDA's expectations for the next stage of trials. Even more impressive, the therapy also boosted frataxin expression, which is another key indicator for the disease, all without any major safety concerns. Analysts are clearly seeing the potential, with H.C. Wainwright maintaining a buy rating on the stock and setting a price target of $23. Lexeo's ability to move forward with these promising results and stay aligned with the FDA's expectations has investors feeling optimistic about the company's future. The next steps in the trial will be crucial, but for now, the stock's strong performance reflects a lot of confidence in the potential of these therapies to make a real impact. Our review on AAOI. Applied Optoelectronics Incorporated specializes in fiber optic networking products and has carved out a solid niche in the telecom, cable, and data center industries. The company designs and manufactures a wide range of optical communication products, including everything from individual components to complete, integrated systems. What sets Applied Optoelectronics apart is its ability to create its own lasers using proprietary technology, allowing it to maintain a level of control and innovation that many competitors might struggle to match. Now, let's talk about why the stock is up 29% today with a massive 30% breakout in midday trading. Investors are clearly excited, and for good reason. While there hasn't been any specific news directly driving this surge, it could be related to a combination of factors. The fiber optic market is growing rapidly, and Applied Optoelectronics is well positioned to benefit from the increasing demand for high-speed internet and data transmission, especially in key sectors like data centers and telecom. Additionally, the company's vertically integrated business model gives it a competitive edge by keeping costs down and maintaining control over critical components. With growing interest in the tech behind fiber optic networks, particularly as companies and consumers demand more bandwidth, Applied Optoelectronics could be seeing a boost in both its order books and its market perception. All in all, the stock's performance today reflects investor optimism about the company's role in an expanding industry. If they continue to execute well and deliver strong results in upcoming earnings reports, this positive momentum could carry forward. Please subscribe, give the video a like, and watch more from our playlist. Thanks.